How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, just like always, we're going to be breaking down the entire market, taking a look at the S&P 500, the Dow Jones, and the Nasdaq. And we're also going to be talking about what I personally did today in the stock market, what stocks am I involved with, as well as some stocks and ETFs that I'm watching and looking to trade heading into the month of March in 2020. And as you all read in the title today, the sell-off continues. The markets are very, very red, and really every single stock pretty much out there saw a red day today. So I kind of want to share with you all my mentality right now, coming from somebody that's been in the stock market for around 6 to 7 years, and I want to go over kind of what my thought process is. What am I doing right now to maybe give you a better perspective, especially if you're new to maybe a big sell-off in the stock market, right? So if you guys enjoy the video, hit that like button for me down below. Also, consider subscribing to the channel if you want to see further content like this. And if you haven't gotten your 2 free stocks from Webull, valued up to $1,400 per share, that affiliate link is down below in the description box, as well as the free Facebook group and the free Discord group chat, which if you guys aren't in there yet, what are you doing? Go get in those free communities, and again, go get your 2 free stocks with a deposit of $100. All of those are linked down below in the description box. So with that being said, let's dive right into it and talk about what the markets are looking like here with around an hour and 20 minutes left in the session. And yesterday, believe it or not, guys, I said I doubt the Dow Jones will see back-to-back 1,000-point red days. And yeah, I was wrong. I was wrong, guys. I'll be honest. I was wrong because today, the Dow Jones, it's not down 1,000 points yet, but it's pretty much almost down yet again 1,000 points on the day. So think about that. We're not even into the Dow Jones yet, but overall, the markets have shed roughly 6 to about 7% in general here in just the past 2 trading sessions, which equates to nearly a 2,000 point drop in the Dow Jones, which honestly, I don't have statistics offhand here, but that has to be some sort of record, at least in recent history, right? And that's kind of something that I'm interested in seeing if I see any statistics around that, because to be honest, it wouldn't surprise me if this is one of the worst 2-day periods, maybe in recent history again, right? So the S&P, not to get too into the Dow quite yet, but the S&P down $98 right here, pretty much down 100 points, just like it was yesterday. So 200 points shed off of the S&P 500 in 2 days. And you guys can see we're getting closer and closer to that price target that I set for the S&P in yesterday's video, being around $3,000 to around $3,030. This is kind of where I could see, quite honestly, the S&P finding some sort of support. And hear me out, guys, because here at this level, it would be putting us on top of that 50 SMA. It would be putting us on top of old resistances as new supports. And in general, if we were to get to $3,000 from the peak, that would be a nice 10% sell-off, which, in my opinion, the market's been in need of this type of sell-off over the past couple of weeks, and I think that would be completely healthy, and this is where I'd heavily consider adding a lot more to some of my long-term positions, maybe in some of these more stable, not really stable, but more of these diversified ETFs, for example, right? Like some that track the S&P are SPY, VOO, VTI is a total stock market ETF. If you guys track, just the total stock market, right? So these are opportunities that could definitely open up in my opinion, if we were to get down to around $3,000. And even now, guys, even now, I'm averaging in, to be completely transparent with you all. And if you've seen my M1 portfolio, you've seen that I'm averaging into stocks here on the dip, and that's kind of how I do my long-term investing. So overall, the S&P, the markets in general today are getting squashed, right? No different from yesterday's session, and that's kind of where I could see the S&P going down to. And quite honestly, guys, any rally that I'm seeing here on the markets, I'm going to consider playing, not shorting the market in the technical sense here, but playing maybe some of these bearish market ETFs that go up whenever the markets in general are going down, kind of like what I did today, which I'll show you here in the next couple of minutes. So expect, not saying to expect it, but let's say we get this rally. I expect myself, right, if everything remains the same here, to maybe, again, short that rally. Kind of like what we were doing, this is completely off topic, but with natural gas a couple weeks ago, right? And I'm considering doing that with the S&P, although they're not correlated in any sense. It's just an example, right? Now going over here to the Dow Jones Industrial Average, this is down 3% right now, down 850 points, and it seems like we might not be down a clear-cut 1,000 points today, but we got pretty dang close, guys. We got down to about 930 points in the red, which really, again, posts back-to-back 1,000-point days pretty much in the red for the Dow, which is insane. Insane. That's about 6 to 7% down in just 2 days of trading. So judging on this 4-hour chart, we've completely broken the main moving averages. So let's pull back to, let's say, this 3-year chart, and now we can see very clearly the Dow is actually at a level of support on this 3-year 1-week chart, being that 50 SMA, which over the past couple of, I guess you can say about a year now, we've actually held that level ever since we sold off aggressively back in 2018. We've held this 50 SMA. So for sure, for me at least, just doing technical analysis, I'm definitely watching this level for the Dow Jones for a potential hold point to see, if it continues to move up from here, or if it tries to move up from here, right? And if it doesn't, that could be pretty bad, and we can maybe be going down to, I'd say, 26,500. That's for sure a level that I'm watching due to it being an old all-time high and resistance over the past couple of years here in the market. So going to the Nasdaq here, Nasdaq is actually not getting hit as bad as the Dow and the S&P, which is kind of interesting because typically when we see a red day, the Nasdaq usually gets hit the hardest. I believe yesterday it actually did get hit the hardest. And in my opinion, it's because a lot of tech stocks held their ground today, believe it or not. Well, not a lot of them, mostly just Microsoft. I'd say Microsoft held its ground today, down about $1.80 on the day, which is really not that bad considering some of these other stocks, they're down 5, 6, 7, 8% today, while Microsoft's only down 1% roughly, right? So the Nasdaq here, going on this hourly chart, it's clearly a falling knife, right? We clearly broke 9,000, which we were talking about in yesterday's video as being a critical support, so that's not good. So for me, on this yearly chart, I'm going to need to see it test next being, I'd say, maybe $8,700. That's one of the next levels that we're looking at here. And honestly, if we were to get all the way down to $8,200, that's kind of far-fetched. But that would be putting us on top of that 180 SMA here on the daily chart. But overall, that would be a near 15 to 16% correction from the top. So I don't think we're going to get that low, but worst comes to worst, this could be a spot, 8,200, that, yeah, maybe the Nasdaq could hold it. But short term, 8,700 is where I'm looking at. after that point, 84.60, maybe 8,500 could be the next spot. These are just in general, again, some levels here for the Nasdaq. And overall, guys, what you'll notice here, especially if you've been in this market for at least 2 years, you'll notice how this is kind of like what it was back in October to December of 2018. And back then, believe it or not, my channel was still active. Yeah, that was about 2 years ago. That's back when I first started my channel. I think I had like 800 subs. I don't even remember, to be honest, how many people were watching me. But if you guys were watching me, you remember how crazy it was back then. We were seeing red day after red day after red day, and the market actually sold off 20% in the span of that period. We can see it right here from October 2018 to December 2018, right after Christmas literally was the last day, or right before Christmas was the last day of the big sell-off, I believe. We lost 20% in value in the market. So this is reminding me of this, and it goes to show, guys, if you're new here, you're panicking, take a look at what happened last time. Sure, we saw a lot of tension regarding the trade war, a lot of panic, a lot of fear, kind of like what's going on now with the CV, right? Very similar, but we ended up rebounding. It ended up kind of blowing over, although things weren't completely settled at this point. It kind of blew over, and this is where a lot of stocks went on sale. A lot of deals were opened, and if you were to buy here, you would have made a lot of money looking ahead. And what am I saying here, guys? Well, don't be scared of what's going on right now. If you believe in these businesses long term, the CV at the end of the day, this global outbreak, this is short-term noise if you are truly looking at it from a 10-plus year perspective. And check out Warren Buffett's interview on CNBC, 2-hour interview that came out yesterday. I actually watched it earlier today. He said the same exact thing, right? This is a time to potentially buy when other people are freaking out selling. If you have that longer term perspective, even a year, 2, 3 years out, this could definitely be an opportunity for you. Not saying for you to go and do anything, but do research, understand it for yourself first, and then if you see the opportunity and you realize now's a good time to strike, well, you can strike, right? And take advantage of some opportunities. So let's go over, guys, what I did today. And honestly, I only made one move today. And you'll see on your screen, TVIX. TVIX, and this goes back to, again, 2018, October to December. If you guys were following my channel, I was trading TVIX pretty much every single day, it seems like, because the markets, again, they were getting squashed day after day, and this kind of reminds me of that time period, but more in a condensed time frame, because back in October to December, the sell-off was obviously more than just a couple of days. This has only been 2 days so far, but still the aggressive nature, the panicky selling kind of reminds me of that time period, right? And I'm sure you guys can relate to that. But today, for me, I ended up buying into TVIX, and again, you guys will see it on your screen here, at around $63, roughly. I think it was like $63.20 or something like that. And if you guys don't know, TVIX is an ETN that trades based upon the VIX pretty much. And if you guys don't know what the VIX is, it's this, ticker symbol VIX. It's also known as the fear indicator, right? So when there's a lot of fear and volatility, when there's a lot of fear and a lot of volatility, and the markets in general are seeing some turmoil, the VIX is going up, right? And what goes up when the VIX goes up and the markets are dumping? We're seeing turmoil. TVIX, back to what I traded today and what I've been trading for at least 2 to 3 years at this point, off and on, of course, right? And this is really a good way to hedge against your positions in the market and to make money on a red day. Because if you thought you can only make money when the markets are going up, you thought wrong, because you can make money via options, put options, you can short the market, or you can play something like this, which trades based upon volatility, again, like I just said. And for me, didn't have any puts today. I don't short the market the traditional way, but I do like playing TVIX, right? And I got in, again, $63.20 on this particular ETN. And you guys see the screenshot, $68 is where my limit order hit. And I know, before you guys leave that comment, I left a lot of money on the table. And to begin with, this wasn't a big position anyway. What did I buy? Like 30 shares, about $2,000 worth of TVIX. So I made, what was it, like $150, maybe $180 of profit, right around there. But if I were to hold for the rest of the day up until, let's say now, where I sold at $80, I could have made $400, maybe $500 of profit with a $2,000 position. That's kind of the type of gains you can make trading something like this. But again, it's very, very volatile, and I wouldn't really recommend this to any beginner that doesn't have experience with market sell-offs and kind of how to get in and out of something like a TVIX, right? So for me, I'm in some longer-term swing trades, right? Microsoft is one of them, right? And I used a TVIX to hedge against the red day that Microsoft saw. Another position that I ended up taking today, very, very small entry point here, is Nvidia, ticker symbol NVDA. This is actually one that was hit hard this morning, like many stocks, but it seems like it found some sort of bottom here at around $260 to around $263 per share. So I figured Nvidia here, I'm liking how the company's been performing. They crushed earnings recently, right? Massive pull down from 320 down to about 260, opening up around 16 to about 17% potential for profit. So I figured, why not add a little bit to Nvidia at around, I believe, 263 it was, and add a little bit more if it goes even further down, because quite honestly, Nvidia's been one of those stocks that I've been wanting to enter really since this point in time when it was at around $230 per share. Not even here, but just in general, guys, I've been waiting for an entry point, and I feel like now that's opening up, and that goes back to, again, what I said. When the markets go down, this is kind of where I do a lot of my buying, especially if we're looking at some longer-term swings. So for me, guys, that's all I did today. I bought a little bit of Nvidia, day traded TVIX. Although I left a lot of money on the table, I still made a nice little hedge there against the red day that it was. And in terms of Microsoft, I'm simply holding on to my shares, did not do any more buying today, but I'm looking to potentially buy more in tomorrow's session or maybe some point later this week. So let me know down below in the comments, what are your thoughts about my trading? What are your thoughts on the markets in general? Are you buying right now? Are you selling right now? Just drop a comment, guys. Let me know in the comments down below. So let's quickly go over a bunch of stocks today. And as you guys know, it was abysmal. There's no need to really pound that into your heads because you know that. That means a lot of the stocks out there were red today. Starting off with Uber, they got crushed. 6% in the red today, down $2.38 per share. And we really had no chance of holding $38. This was the support we talked about yesterday. We blew right through it. We blew right through the 180 SMA. And now we're looking to test 35 to 36 bucks, which honestly, I'm scared if it breaks here, guys. We may be getting a $33 share price in Uber again, maybe $34 per share, especially if this really market pressure, selling pressure continues. Tesla back into the 700s today, down $35 per share, down 4.28%. Not looking too good for Tesla, although the uptrend still continuing. Now we're kind of in this area where we're between the moving averages. You know, we're kind of close to a support around, I'd say, 750, but still kind of, we still have some more room to drop, in my opinion, right? And that's kind of how I'm treating Tesla right now, ticker symbol TSLA. On the flip side, though, a different electric vehicle maker, NIO, today, one of my long-term investments, was actually green, up 14% today, up 54 cents, and it was actually all the way up, guys, believe it or not, to $5.30 here at the market open, or close to the market open, before seeing that massive sell-off. And this is all because we got some news, not going into depth on this, but we got some news about funding. You guys can see, it was with the government, I think. You guys can see it right here, agreement with Hefe's city government on fundraising of $1.42 billion, and this really has to deal with new manufacturing facilities and etc., right? And they're planning on moving the Chinese headquarters to Hefei, which is spelled Hefei. I'm not too sure where exactly that is, but obviously I'm assuming it's in China, obviously, right? And this is good news, guys. This is really good news, especially, again, for me as a long-term holder in NIO. And honestly, if you're looking to swing trade it, I'm liking the price action here because we're seeing a nice support around 430. Now, all we need, in my opinion, is a full breakup above 450, and then the gap fill to $5 per share. That should be no problem, in my opinion, and that's just honestly my opinion here. 10% from $4.50 to $5 per share. I could definitely see that happening. Another stock I'm watching here is Space, ticker symbol SPCE, also known as Virgin Galactic. They're reporting earnings today, 4 p.m. Eastern Standard, which is actually in 1 hour from now. So keep an eye on SPCE. This could be a very volatile one, guys, especially if they say anything regarding around their business model progressing faster than expected. That could be a big mover here in the stock. Or if they disappoint with guidance, that could crush the stock and maybe bring it back down to earth. It all depends. And for me, would I gamble my money on Space heading into the earnings? Absolutely not. I don't do that with any stock, let alone a spec play like SPCE. I rather just put my money on black at the casino. That's just me being honest, guys, right? So Square, SQ, this is one that is interesting here, down 3.7%. They're also reporting earnings, not today, but tomorrow on the 26th of February. And in general, there's about $10 per share in profit opened up from the peak at $87 down to where we are now. And generally speaking, $77 to $78. This is a support for Square. So for me, guys, I'm liking this general area, but the concern is if the markets continue falling, this can have a big drag down on Square, even if they do well in earnings and even if the chart is looking quite attractive. So for me, guys, I love Square. I think they'll crush earnings out of the park, but I'm waiting until after earnings and kind of seeing what the sentiment is around the company and around the entire market in general. So let's speed through some tech names here. AMD down 2.67% today. Caterpillar, an industrial here, down 2.13%. Apple down to $290 per share, down 2.28% today. Facebook down 1%. Not too bad. Seems like it's holding that 200 area pretty decent, but it doesn't mean that Facebook is going to stay here, guys. If the markets continue falling, I do expect Facebook, being a large cap, to continue falling as well, right? Amazon down $26 today, down 1.3%. Not too bad. And back to what I said about Microsoft earlier, it's holding its value pretty well, which means my capital, guys, think about it. Microsoft being my biggest swing trade right now. My capital being in Microsoft is actually outperforming the markets because Microsoft down 0.5%. I'm still red, guys. I'm still red. But what I'm saying here is we're doing better than the markets, 3% in the red, right? We're beating the market by 2.5%, by holding Microsoft here. And again, I am still red, guys. I'm well aware of that. And I probably won't make money on Microsoft until we get back into the mid 170s. But that's okay. That's kind of the whole goal here. And I've known this buying Microsoft over the past couple of days and weeks. So some other ones. Let's see here. What other ones are we going to talk about? J&J. That's on my list as well. Love J&J as a company. And we're getting a pretty decent price here, $144. Not saying that I'm going to average into my long-term positions, but this could open up as a swing, especially if these markets do end up rebounding. If we take a look at gold's performance /GC, gold actually saw a bit of a pull down $27 today, down 1.6%, which is quite interesting, right? The VIX is up, fear is up. You'd think gold is up as well, but no, gold is down 1.56%, and I'd see 1620 being a possible support, maybe 1630 on this 50 SMA here on this 4-hour chart, and from there, maybe we could end up picking up some JNUG. JNUG goes up at a 3x rate whenever GDX goes up, which is simply an ETF that tracks gold, right? And it seems like all of these are seeing a bit of a pull down, so if you're bullish gold, if you're looking to swing trade gold, this could definitely be an opportunity to get into these different names. So overall, guys, don't want to bore you, don't want to hold you too long, but that's it for today's video. If you guys enjoyed it, feel free to go down below for me, hit that like button as always, and consider subscribing to the channel if you want to see further content like this. And if you haven't gotten your 2 free stocks, this is free money, guys. Go get your 2 free stocks. That affiliate link is down below in the description box. They're valued up to $1,400 with a deposit of $100 into the account via Webull. So I'll catch you all in the next video. Thanks again for all the support. Thanks for watching. As always, peace out.